If you've come across Making Tax Digital and thought to yourself, do I need to do something about this? The chances are you do. In this video, I'm going to break down everything you need to know about Making Tax Digital, from what it is to who it applies to and when. My name's Rehan Mogul. I'm a chartered accountant and the founder of Sidekick Accounting. We've helped hundreds of businesses pay less tax and make more money. Let's jump into what Making Tax Digital is. Making Tax Digital is HMRC's long-term plan to digitize the tax system. In short, they want you to stop sending paper records and spreadsheets in once a year and instead report to them digitally more frequently. You'll do this through Making Tax Digital approved accounting software. Now you might be asking why? Well, from HMRC's point of view, they want to reduce errors, catch fraud, and have a very clear position of how much tax you owe throughout the year. From your side as the business owner, it presents an opportunity and also a headache. The headache because there's more admin involved, there's more filings and reporting required throughout the year. But it's also an opportunity because having your house in order today and having everything digitized will give you a very clear picture of your financial position and help you make better decisions for your business and for your own personal wealth. Making Tax Digital for businesses is being phased in depending on what type of business you run and how much money you make. Let's break down the timelines. If you're a VAT registered business, you are already in the Making Tax Digital system. You have to file your VAT return using approved software digitally, usually every quarter, and with that, you're sending all of your transactional data to HMRC. This typically applies to businesses making over £90,000, but you could also voluntarily choose to be VAT registered. If you're self-employed or a landlord with income over £50,000, from April 2026, you need to comply with Making Tax Digital for income tax and self-assessment. And then from April 2027, the threshold will reduce to £30,000. And then eventually, companies and corporation tax will fall within Making Tax Digital. So whether you're a sole trader, in a partnership, a landlord, or you run a limited company, Making Tax Digital will apply and impact you. So why does all of this matter beyond making sure that you tick the box and don't get in trouble with HMRC? For you as a business owner, this is an opportunity to upgrade your financial systems and change how you manage your money. With the right systems in place, Making Tax Digital should reduce the admin burden on you. Instead of a shoebox of receipts, you'll have everything digitized, you'll have an app on your phone, and receipts and invoices will go into your accounting system. It should give you more control because you'll have real-time visibility within that system of how much money you're making, how much you're paying out, and what's left for you. And you'll have fewer surprises because you'll have a constantly up-to-date view of what your future tax bill is looking like, and therefore you can plan to make sure you've got enough cash to pay it. A big shift here in terms of your accounting is going from annual accounting, where maybe you provide all of your records to an accountant at the end of the year, to regular bookkeeping. Bookkeeping for some businesses has been seen as a nice to have, but this makes it a necessity. If your records aren't up to date each quarter and you don't have the right documentation, you won't be able to submit your returns and you're going to be non-compliant and incur fines and interest and everything else that comes with it. That's why getting into the habit of doing bookkeeping every week or every month will help you get ready for Making Tax Digital. And if you need help with that, speak to your accountant. So next up, how do you get ready for Making Tax Digital? Step 1 is to choose your accounting software. You need software that links in with HMRC and also helps you to do everything you need to do efficiently. We like to use Xero at Sidekick, but there's other options like QuickBooks, Free Agent, and smaller accounting softwares that can also do the job. Step 2 is to set up your systems. You don't need to be an accountant or a tax expert to do this, but you do need to automate the basics so you're not turning into a full-time bookkeeper. This means invoicing digitally through your accounting system, capturing receipts on your phone through an app, and linking up your bank accounts to your accounting software so you have a constantly up-to-date feed of information. These small changes and upfront investment in setting a system up will save you hours of work and make you compliant, ready for Making Tax Digital. And step 3 is to get support if you need it. You're watching this video, hopefully this is guiding you as to what you need to do, but also most accountants and bookkeepers will now be ready for Making Tax Digital and can help you put this in place and run the entire system if you want them to. Next, let's look at what really matters, which is what does this mean for your finances? Your tax bill won't actually increase as a direct result of Making Tax Digital because as part of MTD, tax rates are not changing. However, what is changing is the frequency of your reporting to HMRC, which also opens the door up for them in the future, asking you to make your tax payments more frequently than once a year. Therefore, the timing of tax payments may change. However, what it also does for people who currently have an annual accounting setup is mean that your tax planning needs to be done more frequently because otherwise you're going to report to HMRC before you've done any tax planning, meaning it's too late to do anything at the end to reduce your tax bill. So from a tax perspective, the timings will change, but there is no direct impact on the amount of tax you'll pay. The second cost that's unavoidable is software subscriptions for making tax digital accounting software. This can range anywhere from £10 a month up to around £60 a month, depending on the currencies you use, the number of bank accounts you have, how many invoices you send, etc. The way to look at this cost is you're paying to get time back. This system should save you time and hopefully help you save money through better financial practices. And the third cost is accounting. Is your accountant going to charge you more? But if you want them to do all of the work, as they probably do now, the answer is yes, because they need to do multiple submissions to HMRC, which means they need to check things more frequently. And if you want strategic help on reducing your tax bill, those conversations need to happen more regularly. However, there's also an opportunity for you to take some of that work off your accountant's plate to reduce the fee. That might be doing the bookkeeping yourself or preparing the submissions for your accountant to review. In any case, make sure you're working with an accountant who's up to speed on the latest trends and what is needed to make sure that you can comply with MTD without hurting your pocket and without paying more tax than you need to. So there you have it. Making tax digital isn't as scary of a change as people might be making out it is. Have you had the right systems and processes and habits in place before the deadline, it will just become something that happens in the background. If you found this video useful, give it a thumbs up and share it with another business owner that might find this valuable.